It's an urgent warning. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, they're dumping everything, and I want to show you why these big money managers are unloading certain stocks and why you may want to get out now, because I'm going to give you several catalysts why the S&P 500 and NASDAQ 100 could come crumbling down over the next month. But it's not just what they're selling that matters, it's where they see the opportunity and what they're buying. And something else we see huge opportunity in is that of the stock of our sponsor for today's show, QU Media. I'm going to show you a really cool setup where the 9-day moving average is crossing through the 21-day right now, which sets up a 20 to 40% move. The last 3 times this has happened, the stock has jumped. You don't want to miss out on this easy way to make money. I'll show you the whole setup. Check them out on the TSXV under symbol QU or the OTCQB under symbol QUF. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now, let's head over to Goldman, where every Sunday, as we always do, we like to look at the technicals, momentum, machine positioning of the market to help you make more money trading and investing. As we look at the headline of Goldman, we continue to see institutional clients sell crowded tech stocks. And why are they doing that? Because we know that institutional money managers like to put profits in their pocket, but who do they want to sell to? Mainly it's retail investors, because as you're about to see, all the other buyers now are out of the market in a big way, leaving this scores a retail heavy market. And as retail runs out of spending power, look for the major equity indices to come crumbling down. And where are they going? Well, they're moving out of those magnificent 7 underperformers, and that is setting up a potential move by the CTAs. Now they're rotating into cyclicals, but look at this. Over the next month, and this is a big deal, the next week isn't the issue, but over the next month, notice in a flat tape, the machines aren't buying here. Why? Because they're maxed out. I'll show you this. In an up tape, they're buying just a smidge of global equities, but over the next month, in a big down tape, if something could cause stocks to drop, 186 billion of global equities, 41 billion in the S&P 500 alone. You want to talk about a major correction in the major indices. You're seeing the setup now, because here you can look in this chart and you see global CTA estimates. They're virtually maxed out. There's no real buying. The skew becomes to the downside. You look at it from the S&P 500. You see again, maxed out. The skew remains to the downside here as well. And how about this? We look at global positioning. You can really see that they are stretched. Yes, they could go a little bit longer here, but if there was any catalyst that sent the market down, these machines are going to look to reverse, lock in these gains as quickly as possible. And that's why we're suggesting you may want to do this too. Start taking profits, because these big institutional money managers, well, they know what they're doing. In fact, here you can see just in CTA positioning and US equities, they are stretched to the long side. And how about systematic? Now we bring in not just CTAs, but risk parity, vol control, all these algorithmic strategies, and you can see they are very long the US equity indices and the market. And all that means is once they get long, you start to look for any catalyst where buyers start to evaporate. And who's been buying this market in a big way? Well, it's not just retail. Well, it's corporates, and they're blacked out in a big way. And we now estimate we are in the buyback blackout window, with 60% in the blackout window today, 85% in the blackout by the end of the week. That now starts on Monday. This is going to run all the way through April 26th. So now you have the catalyst. The biggest buyer of the market is now gone. The machines are skewed to sell if there's a big down move. This is leaving retail investors sitting at the top. I'll show you when we look at the charts in a moment, because you can see it's very obvious why these institutional investors want out ahead of earnings. And we look at Mere's positioning here. We can see the S&P 500 close at 5234, the sell trigger at 5,077. Now keep in mind, the sell trigger is likely to go up every day. So as those two get closer together, wait for the machines. They're going to start likely selling over the next month if retail doesn't keep this market going. And here you can see the momentum on the S&P 500 is positive. RSI, or relative strength, is at 66. MACD, or moving average convergence divergence, divergence. That's got a positive cross. Our own Momentum Timer Pro. Now, if you have trouble trading these technical signals, which get you out early or in early, late, out early, we smooth that all out. We have a great report that adds another signal. We aggregate these all together to help you be a better technical trader. Right now, we got 46 consecutive daily buy signals on this report. You can sign up for a free month. While you're at that, check out the stock of our sponsor, QU Media. Again, TSXV, QU, OTC, QB, QUF. We have a buy it open on this using our two reports because we also have a report that tracks the machine positioning. This is helpful because you want to lead the machines on the way up and get out when they're at their stretched positions. That's what we try to teach you, is trade ahead of the machines to front run them. We do something different than no one else does. We run a historical overlay. We find out when they're offsides historically, gives you the advantage. Again, 30-day free trial on both those. We show you how to make money on this show during the week. Our subscribers love this. Here we see we're raising our stop loss level to 508.12. Why are we doing that? To hold on some of our gains. We're up 20.33. A lot of traders don't try to lock in gains. We want to encourage you to do that. Now, upside target, that's questionable. When you're at all-time highs or right near it, who knows? Downside target is a 50-day moving average. Let's take a look here at the chart for the SPY, because there's something I really want you to see, and that's looking at the 10-day here. Now, we have the volume profile turned on. If you have some charting software, look for this setting because it tells you over a period of time where most of the shares are traded. So what you can see is over the last 10 days, as we know, that institutional money managers are unloading these overvalued tech stocks going into earnings. What do you see? Sure enough, the buyers are below. That's your retail. Sellers above. What happened here? Well, that's the Fed mean. That's those machines, just those algorithmic ones that trade the news, driving the market up. But look, it's starting to fade. You break below this 515.16 level, and then all of a sudden, you're setting up a catalyst for a big pullback, potentially support now becomes 472, maybe even down here to the 450 range. Could you imagine an opportunity to capitalize on some gains and reload there? That would be a tremendous opportunity for you, and that's why I want to bring you this information. Let's take a look at the QQQ. Now, remember, we got stopped out of this trade, but we still keep an eye on it. RSI is at 60. MACD's got a negative cross, so momentum is still positive because of our proprietary overlay. Tells us that yes, it still potentially could go higher, but if you're still in the QQQ, I want to encourage you to try to raise your stop loss level, try to hold on to these gains. And what do we see? Upside target right back at the all-time high. Downside target, the 50-day moving average. Let's take a look at QQQ here, and you can see with the 50 days got some margin here, but major supports at 472.59. If we look at the 10-day, here you can see same setup as the S&P. Those institutional money managers have been quietly selling out of this market, letting everything turn to retail. Here you can see over the last 30 days, as prices went up, they said, hey, you know, going into earnings, we want out. Look at momentum over the last 30 days. Definitely skewed to the downside, leaving this market all in the hands of retail as we go into blackout. Now, how about the bond market? Are we seeing a potential setup here for lower rates? Well, based on the charts, it's really interesting because we are indeed seeing that. Now, we heard from the Fed this past week that they don't think they're going to be cutting rates anytime soon, but we know historically that means about nothing. The Fed's terrible at their predictions. Let's take a look at what's going on with Metre. They're noting over 112.91 to buy on the 10-year. Fridays close at 110.75, so we're not near there yet. Here's the key part. They are maxed out to the short side. Now, you want to make money trading machine positioning? That's the key. You look for when they're max short, you look for where prices kind of bottom out, and then you buy and let the machines do the heavy lifting for you. That is key. And here you can see on our CTA report, we saw a pullback. They're buying back. We're showing they're buying back in here. This is our fast algorithm. This is like Metre. And we have these slower ones, which is more like Goldman and a lot of other companies. But here we can see there are 6 consecutive daily sell signals. So momentum got pulled back here on TLT. Now, we've showed you how to trade things with a stop loss. This one, We didn't. We're down 1.49%. What's really key is if you make that mistake and you're not trading with stops, we encourage you to do that, but there's ways to dollar cost average back in. We give you all the tools and signals to do that, and we'll show you how to do it here right here on the show. Cost basis 95.40, upside target 96.40, downside target a little bit below. We hit that, but we think this thing here, wait till you see the charts, is definitely skewed to now move to the upside, because look at the volume profile here over the past 30 days. It's very clear where buyers have been accumulating. Now, a lot of people say, well, the bond market's dead. Rates are only going up. Well, these traders say, no, actually rates are going down, bond prices going up. If you look at the machine positioning and you say, wait a minute, they're all maxed out to the short side, should talk about opportunity, because look at this here. You have what looks like a bullish flag forming. You have a flagpole. Look at this. You got sellers here, sellers here, sellers here, and look at all the buyers right underneath. There's that 6-month volume profile. You get a rally here in price, what's going to happen? The short seller's going to want to capitalize on some gains, unload those shorts, unload them again. The machines then kick in and drive this thing up. Easy opportunity there for you in bonds. And again, we do this every Sunday because we want to help you make money trading. Of course, we have our tools. We have the stocks of our sponsors. We show you how to trade those as well. We want you to be making money. Let's take a look at GLD. Now, this is what we didn't trade because, if you're looking to make money, we don't like trading things that are near all-time highs. Now, some of you do, and that's great. Keep in mind, we're not talking about the mental you've got in your safe at home. We're talking about as a trade. We showed you some other opportunities, but let's take a quick look at gold momentum. Still positive, but we're starting to see a slowdown here. And that was on the back of 24 consecutive daily buy signals. So we gave it to you on our reports. But look at the 1-month window. It's maxed out. See, we give you momentum over a 1, 3, and 6-month period. We give you, of course, the machine positioning. It says gold is stretched. Let's take a quick look at the charts here. And what do we note? GLD, sure enough, sellers coming in right above. You see where the buyers and sellers are at. Sellers were down here. Buyers squeezed them up. Now the question is, can they hold this? Or is this post-FOMC move just a bunch of machines hoping to lure some buyers in before they turn into sellers? We'll find out. We thought the bigger opportunity was in GDX and still is. Now, we got stopped out on 319. I'm going to show you from a trade perspective. You might want to reload this deal. Now, we walked away 5.87%. That trade running about 2 months long. Not bad. That's a great move. Could you imagine if you're making that kind of return every couple months? We show you how to do it. Now, here you go. Momentum is positive. RSI is at 56. MACD's positive cross. We got a bunch of buy signals going on here. Friday's closing. We'll look at that. When you see machine positioning maxed out, we look at momentum. It's pretty strong here, but look at the setup. This is kind of interesting. Now, on the 10-day, what do you tend to see? You see sellers coming in, driving price down. But look at this. Go to the 6-month chart, and what do you see? It's sitting right here on the 6-month volume profile. So now we got stopped out, which we're happy with. Take the gain and move on. If this holds here and rallies up, then you want to look to add some positions. If it breaks down, then see where it goes. Follow our reports. We'll show you when to get back in on that trade for sure. Because again, not many people are good at trading these volatile ones, but our reports give you the edge you need. How about palladium? Look at this one here. We got stopped out for a 2% gain, but notably we're only in a month. So imagine made 2% a month. That'd be a 24% return per year. That'd be pretty impressive with one trade. But again, look at this. Momentum is positive, or what? Actually, this is negative. I should have changed that. Look at this. RSI slowing down. MACD slowing down. We had our stop loss. Show you. Lock in your gains when you make them. Upside target's 187. Downside is 89.58. We look. Our machine position was max long and selling down. Again, we give this to you every day. We show you which ones to trade. We give you videos, tell you the setup. Look, look at momentum. Maxed out on the 1 month and fairly stretched out among other time periods. Let's take a look at palladium and see over the last 6 months, you see the volume profiles coming down, settling right maybe at the 50-day moving average. So here, if it holds in this zone, it's setting up a move higher. That would be a buying opportunity in the short term. How about this? You see sellers dominating above, pushing price down. So what could be the back of that? Well, we'll talk about the dollar here that could be the force that really is the catalyst for driving these metals down. Again, that's why you want to make money when you can. But look at agricultural commodities, momentum positive. RSI, this thing is maxed out, overbought in a big way, but still can go higher. MACD positive cross. We showed you how to trade this one back in December 18th. We showed you buy it, open this trade. Agricultural commodities were up nearly 15% on that trade. Could you imagine? That is impressive. Your friends would just be amazed what you're doing here. 46 consecutive daily buy signals. This thing stretched on a technical basis. Machine positioning stretch. So what does that mean we do? Raise the stop loss level up. Friday's closing at 24.08. We're at 23.19. Again, holding gains, but given opportunity for the thing to keep going higher. Let's take a look at DBA and look at that beautiful run we took advantage of. And let's go out to the 10-year chart. And you say, wow, this thing could just break out. You could do that. Where might it go from here? Well, it looks like we pick up some resistance from way back a long time ago, 2014. So that next move could get things way up here to 29. We'll see how this goes because we gave you another trade showing you how to use our reports. Soybeans, look at this. We're up 3.41% on this. Now, how did we do it? You might say, what did you do? We took our two reports together. When the machine position was extreme short levels and it started to flip, we showed you, our subscribers, on a video what to do. It shows up on the reports every day. And then we showed you the momentum switch, and you put those together, put a buy on that, and next thing you know, here we are. Buy it open on March 5th. We're up in this month alone, 3.41%. There's 12 consecutive daily buy signals. This could push DBA up a bunch. Momentum is pushing higher here, just like that on our sponsor QU Media. We'll show you that in a bit. Be sure to stay and check that out. But let's look at soybeans. And here you can see, look at this big weekly chart, because we notice it gets pulled back into the supply zone. What happens? Buyers send this thing launching up. Pulls back, buyers send it launching up. This time, buyers are coming in. We showed you the opportunity. It's huge. And now look, we're looking at a move at up to 27, likely up here at 28. This is a nice, simple, clean trade for you. This is the kind of stuff we show our subscribers. You trade it, you make money, and that is the game. Now, what could send metals lower? That would be the dollar. Here we note that UUP is bullish. We see momentum is positive on this. We now got 6 consecutive daily buy signals after tripping just kind of a sell signal out of nowhere. Upside target is a 200-day moving average. Downside 21-day. Look at this. Machine positioning fairly long. We know technically this thing is fairly long as well. But let's take a look at, of course, the dollar here and see what's going on with UUP. And that is right here. We've given our subscribers some other signals on how to be long the dollar and make money. And you can too. All you have to do is check out the links in the description below. Jump on 30 days. Why? Because my buddies only give you 7. Because we know 30 days, you'll pay your subscription for a year. That's that easy. Upside target, 200-day moving average. You want to talk about your catalyst now for sending, of course, those metals lower. Let's zoom into the 10-day. Here you can see buyers definitely beneath it. How about the 30-day? Indeed, buyers here beneath that. There is your catalyst to send perhaps gold miners, palladium, platinum, all those other things down. That's, again, what we're seeing technically. But one thing we think is going to go up a whole bunch, and that is the stock for our sponsor for today's show, QU Media. You can find them on the TSXV under symbol QU and the OTC QB on the symbol QUF. I'm going to show you a very quick, simple trade. This is a 9-day crossing above the 21-day. We're going to look at the history. The stock jumps 20 to 40% each time this happens. A nice, easy way for you to make money. Let's talk about QU because they are the fastest growing creator media company. Big company in India. You can check them out. All the information in the description and pinned comment below, because here you can see is Q Games' mellow growth trajectory continues via delivery of 2.5 million downloads. That is impressive as more people look to use QU Media. And here you can see then QU USA and Chatterbox influencer marketing business units are driving strong 2024 growth. All this is setting up now is a move higher in their stock price, which again, we think you can take advantage of on the TSXV, QU, OTC QB QUF. Let's take a look, because here's the setup. Now we've got the 9-day here. This is the moving average, simple moving average in dark orange. The 21 days in red. Now you see it's just about to cross it, and what do we notice? I'm going to show you the buyers are stepping right in here. It's trading right around 4 cents at the time of filming on Sunday. Now let's go back. What do you see? RSI picking up here. MACD positives cross and building up steam. This is the daily chart. Look what happened. Here it was at 7 cents, jumped to 8. There it is, positive cross, jump. Second time it happened, positive cross, went from 6 cents to 8. Here you go, look down here, RSI building, positive cross MACD. How about again, third time? Yes, that's the charm. It happened cross here, it pulled back, and then boom, took off. 5 cents up to 7. There's your 2 cent move. Right now we're looking at 1 cent up to 5, 2 cents at 6, and you notice it tends to get up here to 7. You're looking at a very quick and simple 20% trade, maybe upwards of 40. Put that trade in. Look at trying to hold at that 5 cent level. Now keep in mind, it might move a little bit lower, but if it jumps up, move your stops or close out positions. It keeps rallying. Again, just keep pushing your stop losses higher, because as we zoom into the 30-day chart, what do you see? The buyers are coming in here right around 4 cents. They're putting support under this stock in a big way. You zoom in, and what do we see? Technically, momentum building on the MACD. You see on the RSI, again, right here on the 30-day chart, buyers are stepping in, creating a floor and an opportunity for you to make some money. Again, QU Media on the TSXV under symbol QU, on the OTC QB under symbol QUF. And as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your research before placing any trades. With that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.